Investing in the stock market can be as simple or as complicated as you want it to be. Step one is that you need to open a brokerage account. I use Charles Schwab. Anything that you like is fine. Open an account and you'll open two. You'll open a Roth IRA and an individual brokerage account. The reason you want two accounts is that the Roth IRA is for when you're 59 and a half and older. It's for retirement, the future. The individual account is maybe the more immediate future. So say you want to retire a little bit earlier, then you can tap into the individual account without penalties. We're going to break this down by levels. Easiest first. Easiest is always going to be an S&P 500 ETF. I picked SPLG, VOO, or SPY are fine as well. These are seen as conservative, relatively safe, high quality, long-term investments. The reason you're having it in both accounts is because you want to keep things as easy as possible. So if you are fortunate enough to be able to max out your Roth IRA, it's going to be $7,000 per year is the max. And let's say you have another couple thousand to continue investing. You're very fortunate. Good for you. Congratulations. You want to continue investing in it. You just buy the same thing in your individual account. If you only have, say, $2,000 or $3,000 or $500, whatever you have, anything is better than zero. Focus on your retirement first. Level 2 is intermediate. This is where things get a little bit more complicated. Instead of having an S&P 500 fund as your main one, you might consider something like a technology fund in your Roth IRA to avoid the biggest tax bill possible, and in your individual account, S&P 500 and a dividend fund. People always ask, shouldn't you put the dividend fund in the Roth IRA to avoid the taxes? Come on, this is minimal growth, small dividend, massive growth, big tax bill. Level 3 is advanced. You might consider still having the big three ETFs as your foundation portfolio. Think of it like a pyramid where the base, the foundation, is the safest, and then you grow from there smaller and smaller as you get to the top. Here with the advanced investing strategy, you might decide to add some individual companies. These are some companies that I like, that I know and use. That's my starting point. What do I know? What do I use? What do I like? And maybe a little bit of speculative investments, like say, for example, Kava. Very small position, nothing more than you're willing to lose. Finally, we get to the expert level. You still might choose to have the foundation be the ETFs, but you're going to take on a lot more individual companies. Now, most investors might say, you know what, I don't want any individual companies in my portfolio. I want to keep it relatively easy and safe and diversified through ETFs. Some investors, like myself, want more individual stocks for potentially higher returns. I'm okay taking on a little bit more risk. Now, someone might see the stuff in red and go, oh, bro, these are so risky. You're right. But speculative investments make up the smallest part of my portfolio. That's it. Investing can be easy. It can be complicated. Oh, new policy. If you're not following me, I'm not going to respond. It's a way I set boundaries and prevent people from taking a little too much advantage.